Hi, what's up, traders? You're welcome to my channel. So this is DJ the Analyst, and I want to welcome you guys to my channel. So if you are new for the first time, please like and subscribe to this video and help us share this video because I'm going to be sharing with you guys another interesting trading video that is going to help you guys to navigate most especially around the market. And of course, we have an interesting topic which I'm going to be sharing with you guys, which is how to trade the synthetic market because I have a lot of traders who don't really know, and especially the upcoming traders who don't know how to navigate around the synthetic world or synthetic market. So this video is going to help you cover these questions, which I highlighted here, which is the first one is what is a synthetic market? Two, the broker called Derive, and which assets are traded under the synthetic market, and how do you know the assets that are beginners friendly? Okay, so all these things are going to be discussed in this video as we progress. All right, so first of all, now we'll talk about um how what is a synthetic market. Okay, now when we talk about the synthetic market, we say the synthetic market is a market that is traded with technical analysis. Okay, it's traded with a technical analysis, and it is a market that works with just you trading with your technical analysis. It does not follow the news, so it is not affected by any news or whatsoever. So it's just a market that you can trade with your normal technical analysis. Of course, if you're a currency trader, you know that for currencies, it is not so. For currencies, you use technical analysis and fundamental analysis. That is to say that you trade with the news. For those of you that are very conversant with trading the currency market, but synthetic markets does not need any news impact. They'll just the knowledge of your technical analysis and you are good to go. Okay. So now when you talk about now the broker called Derive. Okay, now this broker called Derive, this these are the broker that these are the people that own the synthetic markets. Okay. The name of the people that own the synthetic market are called Derive. Okay, so these are the people that you use to trade the synthetic markets. So let me let you know that the synthetic market is a one-man show. What do I mean by that? It's a one-man business, meaning that is an business that is owned by a one person. So it's a one-man establishment. Okay, so the derive you must know, and if you're a trader coming into the synthetic market, it's very important that you understand this the broker, you know what you need to understand, what you need to know in the synthetic market, and you need to prepare yourself on what you need to understand. That is why I'm taking time to explain this thing to you guys. So whenever you want to, you use the broker, which is the derive. These are people that also uh they are, it's a one-man business. So when you are trading any of their assets which they make available for traders. So when you don't actually know how to trade these assets very well, you might end up losing your money. That's the truth. You might end up losing your money to them. So it's a win-to-win thing. If you know, understand how to trade these markets, you make money from them. But if you don't know how to trade these markets very well, you don't understand, you don't have a good trading understanding about the how to trade the synthetic market, you end up losing money to them. So that is why I always advise traders that are coming in to trade the market should have a very good knowledge about the forex market, be it synthetic or the other currency or forex markets. Okay. Now, which assets are traded under the synthetic market? Okay, now if you look here, we have varieties of many assets which you can see. You can see them here. We have volatility 10S derived. You can see volatility 10 derived. These are all the brokers that are, these are all the assets, I mean, rather, that are under the synthetic market. So we have VIX 25S derived, we have VIX 25 derived, we have VIX 50S derived, and VIX 50 also derived. So if you check, just go scroll down, you start seeing all of them 25, 50, 75X, VIX 75, VIX 100X. All these things are derived. If you look down, you see them that they are all under the synthetic market. Okay, so you can see step 500, step 400, step 100, blah, blah, blah. So crash and boom and jumps and the rest. Okay, so now these assets, they are all traded under the derived um, under the synthetic market, okay? So which is owned, okay, which is owned by an organization which is called the Derive. Okay, I said it before that these people, the broker, these people called the Derive are the broker. They are the people that own these particular assets. Okay. So whenever any assets you choose to trade under this now, which is listed, it means you are trading under these people, okay, which is the derived, the broker. All right. So, and another thing again, you need to know that all these assets, they have different characteristics, different behavior, and so on. Okay. Just like for instance now, you know that every human are not the same. Okay, every human are not the same, which I'm going to be talking about them under the beginners, under how do you know the assets that are beginners friendly. I'll be talking about more of this under that place or under that chapter rather. So it's very important that as a trader, you know how this market works. I've traded the synthetic market for close to 7 years now or so, and I've understood how this synthetic market works. Okay, so this is very important that you know this synthetic market, you know the right assets to trade. Now we have different, which I show you guys now. We have different assets under the synthetic market. And when I started, we have the boom and crash, which I listed here previously, boom and crash, volatilities, volatility 100S, and so on and so forth. Okay, so if you want to understand this asset, now first of all, you pick an asset and try to understand how this asset works. Okay, try to understand how this asset work. How volatile are they? Okay, are they beginners friendly? Are they asset that you can start with as a beginner trader? Okay, now the mistake many of us or many traders do is that they go to start up with assets that are not friendly or that are not beginners friendly. And before you know, because of that, they feel that every other assets are the same. No. Okay. So when you start with assets which are friendly, which are beginners friendly, it can help you to understand how you can navigate around other peers or other assets, okay, in the synthetic market. Like I said before, that you must know everybody are different. Now, everybody are different in the sense that just like the way I am now, I have my own character and another person has his or her own character. So you cannot say maybe you cannot compare me and the other person maybe if that person is someone that has his character is not good, you cannot compare me to that person. Okay, so everybody has his or her own character. Maybe this one character might be someone that is not a friendly type, and why I might be someone that is a friendly type. So these are the things that you need to understand. So the same way or the same thing that happens in human, this is what also happened in the synthetic or in this as in this market. Okay, be it the synthetic currency and the rest. Okay, so now I want to show you guys. I'm going to be picking some assets which I'm going to be explaining. I'm going to be explaining uh their character and behavior. Okay, so which I've already spent time to view and work on them for some time, because for you to understand how all these assets work, you need to spend time. I mean, you need to spend time to study and to know how all these assets really work. Okay, you need to spend time to know how all these assets really work. So I started with trading the boom and crash. Okay, so this was actually the assets I started with. Now, mind you, these assets are not the same as that of other assets which were listed. Now, I'm going to tell you why these assets are not the same as that of other assets. Now, this one is like they are in a family. Okay, boom and crash. They have a family which is boom and crash, which I'm going to explain. The VIX assets have a family, which is VIX 75. That is the VIX. When I mean VIX, I mean volatilities. The volatilities asset has family, which is VIX 75, VIX 75X, name them, VIX 100, and so on and so forth. And we also have the jumps. So the jump have a family, which will have jump 10, jump 100, jump 25, and so on and so forth. So that is how it is when it comes to all these assets. Okay. Now the boom and crash, the word boom, if you look at this, and this is boom 1000. I really love trading these assets because these are the assets I started with as a trader. So when I was coming up, becoming a trader, I was introduced to trading this boom and crash, and before I begin to navigate trading other assets. Okay. Now, when you want to trade the boom and crash, for you to understand this, because like I told you guys that you need to know how they behave. You need to understand how this assets works so that you don't end up losing your money and losing your fund. Okay. You need to have a good understanding, a comprehensive knowledge about how this asset works. Now, the boom and crash, the word boom, if you look at that word, means something that moves up, like how will I call it? Boom. A the boom means a spike. Okay, something that moves. And now in this boom and crash, now we start with the boom first. Now the boom assets, we have the spikes and we also have the ticks. All these things are in the boom and crash. There's always a spike and there's always the ticks. Okay, let me write them down. In a boom and crash, in the boom and crash, there is always there is always a spike and a tick. Okay, so there's always a spike and a tick in all the boom and crash. So these spikes and ticks only happen on the boom and crash. It does not happen on the volatilities assets. The volatilities assets are on their own entirely. But in a boom and crash, it only happens within this family of boom and crash when you have spikes and you have the ticks. Okay. Now, another thing again, you need to know that for the boom and crash, for you to know how to trade this boom and crash, you must understand that you need to know that you must have a good understanding about the trend. of what the market is doing. Not only the boom and crash, even other assets, but you need to know how to catch spikes. If you are good at, if you want to catch spikes, you must understand the trend of that market. And if you want to trade the ticks, you must still know the trend of that the same market as well. Now, if you look at this, yeah, so the boom is talking about the spikes, something that was now moves up. Now, if you check here, okay, like I said, they always have the spikes and ticks. Okay, now for the boom, boom 1000, yeah, their spikes, okay, the spikes always move up. Their spike are the buy, okay. The spikes for the boom, sorry, the spikes for the boom, the spikes for the boom. So we have the spikes for the boom, the spikes for the boom are the buys. Why the ticks are the sell, the sell. So that's for boom 1000. Any boom, because we have so many booms. We have boom 1000, boom 500, boom 300. For those of you that maybe you're conversant with this asset, you know what I'm saying. We have boom 1500, 300, 900, 600. These are the new booms and crash. Okay, we have the same thing we have in the boom. That is what we have in the crash. So the two assets are opposite. Though there's spikes and ticks. I'm going to explain that for the crash. I try don't want to make this video too long anyway. So they are the spikes are identified as the buys on the boom, and why the ticks are identified as the sell. Okay, so when you are buying on the boom, you are catching spikes. Okay, you are catching spikes. Now, if you look at this, for this move here, this buy that is happening here are the spikes. This buy are the spikes. All these buys you see here, they are the spikes. Can you see them now? They are the spikes. So, but when you are selling, means you are catching the ticks, okay, which they are not spikes, okay. You are catching the ticks. All this sell here, okay, they are the ticks, which we see on the boom, the boom and what crash. That is for, I mean, sorry, for the boom. So now this is the same, like I said, this is the same thing happen for all the booms. The ticks, they buy, the spikes, sorry, are the buys, while the ticks are the sell for the booms. Okay. Now, why for the crash? Any of the crash assets, which any of the crash assets, let me pick one of the crash assets. Okay, let me pick one of the crash assets. So let me pick one of the crash assets. Okay, now I picked one of the crash assets. Okay, now remember I said something that in the boom, when you buy, you are catching the spikes, and when you sell, you are taking the ticks. But for the crash, is the opposite. Okay, now for the crash, when you let me write it. So for the crash, when you buy, oh, sorry. So for the crash, when you buy, when you when you buy, when you buy, you are when you buy, when you buy, you are catching the ticks. you are catching the ticks. But when you sell, but when when you sell, you are you are catching spikes. Okay, so I hope this is clear. So remember, I said for the booms, when you buy, you are catching spikes. But when you sell, you are taking the ticks. But in the case of this, when you buy, you are catching the ticks. But when you sell, you are catching the spikes. Okay. Now, if you look at this now, this is crash 500. Okay. So this is crash 500. All crash assets. So the crash means it is spiking like crash. If you look at this now, spiking down. Now, if you look at the sell, yeah, all these are the sell candle. So it means that when you are taking your sell on the crash, you are catching spikes. Okay. When you are taking the sell, all these are the sells. So when you are taking a sell, you are catching what is spike. When you buy, you are taking the ticks. Okay. Don't forget, when you sell, you are taking what you are catching spikes. Then when you buy, you are what when you buy, you are catching the ticks. Okay. You are catching the ticks. So it's very, very simple, guys. Okay, so this is how to for you to know how to trade the boom and crash. So you must understand that if you want to catch a spikes or you want to catch spikes on the any of them, make sure that the trend of that market is either selling or buying. For the boom, you want to catch spikes, make sure that the trend of that market is buying. Why, if you want to catch a spikes on the sell, that means on crash, make sure that the trend of that market is selling. That is the only way you can be able to catch spikes for the both of them. Okay. So that is it. Now, another asset again, which I love to trade again, is the on the VIX, is VIX 75. Okay. So I actually love to trade these assets so much. The VIX assets, okay, VIX 75. Now, these assets, like I told you, they are not like the boom and crash, which I just explained now. They are different assets. Okay, they are different assets. So these ones are assets that for you to know how to trade these assets, which is VIX 75 assets. Now, these assets, they are friendly. Okay, what do I mean that they are friendly? The boom and crash, the one I listed earlier, they are not really friendly for beginners. Yes, they're not really friendly for beginners. So I won't advise any beginner trader to go near those assets. Okay, usually when you want to catch spikes, if you don't understand the rules for catching spikes, the market might end up dealing with you. But this one is beginner friendly in the sense that you can reduce your lot size can be reduced to the smallest, to the lowest, which is 0.001, and you can trade with it. But before trading, like I said, you need to have a good knowledge about how to trade these assets. So if you see from here, it has actually been selling for a longer time, and I've been on the sell for quite a longer time now. So I've been selling these assets. I've been on the sell. Yeah, so and it's currently buying now on the daily candle. It's currently buying now. You can see the buy on the daily candle. So it's the buy is a pullback, which is going to lead us to sell the market. So we are only taking if I draw my trend line, okay, if I draw my trend line, you can also see that we're waiting for price to come back maybe to this 8 hours order block. So to that 8 hours order block there. So so you have a pullback, then get back to this other block here or this one here. Then for me to I'll go down to my 4 hours, which is my favorite entry time frame, to take my entry on that particular time frame. Okay, so these things are very easy if you understand um the rules and you know how they work. So study the assets, study them very well, and you can understand how all these assets works. Now, assets that are not friendly, VIX 100, VIX 100, VIX 50x, VIX 50, VIX 25x, all this one that has XX with them, VIX 100, VIX 25x, VIX 150x are a kind of a bit beginners friendly. VIX 250s too, if you reduce your lot size, they are friendly. And that's why I always urge traders to learn how to hack your lot sizes when trading in the synthetic markets. I have a video for that too. If you're interested, you can also let me know and I'll share it, or I'll drop it. Sorry, I'll drop it in the description below on how you can hack your lot sizes on the synthetic market. Okay. And you also have this step. I won't advise anybody, it's not a beginners friendly. All the steps, step 100 down to all steps, they are not beginners friendly. So I would not advise any trader that is just coming into the synthetic market to go to any of those assets. So just stay clear from that particular market and also the jumps as well. Yes, I will advise any beginner trader to go in for the jump because the jumps are also very, very volatile. They are not beginners friendly too. Okay. So all these assets are listed now, they are not beginners friendly. And I also listed the ones you can start with. You can also start with another beginners friendly asset too is you can also go with VIX 10, VIX 25, and also VIX 75, which I just told you guys to. VIX 75S2, you can reduce your lot size on that. So we have the lowest lot size, which is 0.005, and you can also work with those assets. So because I've spent time studying all these assets, so I can tell you from experience, the assets that are very, very friendly and the ones that are not actually friendly for beginners. Okay. So guys, if you like this video, please do well to um, subscribe, give us a thumbs up, and also share this video, okay, so that other people too can also learn how to trade the synthetic market and know the right assets they should trade and the assets that are not beginners friendly, because this information will also help others out there for them to also know the rights or know how to trade all these assets. Okay, so thank you guys for your time, and I really appreciate your effort you guys have been giving. So make sure you drop your questions. If you have questions regarding to this video, please drop them on the comment section. I'll be there to answer you guys. So thanks so much, guys, once again, and see you guys on our next video.